Hello, ladies and gentlemen. This is Blake Morrow of ForexAnalytix, and this is the week ahead for January 9th, 2017. Before I get started, I want to let you all know that this will be a normal weekly installment, so you can come back and listen to this every week, and it'll be included with our newsletter. But also, I wanted to mention that if you haven't had an opportunity to take advantage of our holiday pricing special, make sure you do that with ForexAnalytix. Go to forexanalytix.com. That's analytics with an X. Um, Select the holiday special, and it's 50% off for your first 2 months. So I want to make sure that you guys get an opportunity to take advantage of that because that special will be over January 16th. All right, let's talk about the week ahead. So next week, we have very limited data coming out next week. The highlights of the week are really going to be Janet Yellen speaking on Thursday. She is speaking in a town hall meeting in Washington D.C. Excuse me. We have Chinese trade balance also on Thursday, and then Friday we have U.S. retail sales and producer prices that will, probably be a market mover. But up until then, there's certain things that I think certain instruments that we're going to have to watch just to that might actually trigger a response in other markets. So the first one that you're going to see is gold, and I'm watching gold very carefully just because of where it currently sits. Gold has had a nice bounce off the lows. However, after this extreme sell-off that we've seen since the elections, the US presidential elections, we've had a very shallow bounce. And as long as we stay below 1200, gold's going to have a very difficult time. If it can get above 1200, that should trigger a response with dollar weakness. Now, what also is around 1200 is the 38% retracement in gold. You can see the 38% retracement comes in right here. So just keep in mind, if you guys are, bearish the dollar, you want to be careful about being too bearish while gold's below 1200. If gold can rally above 1200, that should usher in some dollar weakness. Speaking of the dollar, let's take a look at the dollar index. Now, the dollar index, we have had a multiple failure up at 103.50. Now, if you don't understand why that's such a big resistance level, you have to actually go out to the weekly or monthly charts. So if you go out to, like in this case, the weekly charts, you'll see the lows from 2002. That previous support is actually acting as current resistance. So there's a lot of reasons why the dollar is stalling up here, but more importantly is the fact that we had a false breakout above the highs that led us to 127% extension down towards 101.30. If gold breaks above 1200, there is a good chance that the dollar index will break below this 101.30. So I would assume that those two moves would happen hand in hand. Now, speaking of other important dollar pairs, the dollar yen is something that we should be watching very carefully. We did have a double top, but the double top didn't quite play out the way I had expected. I expected a move to 113.50. Now, we have bounced because of the response to the non-farm payrolls on Friday. However, that doesn't mean the double top won't play out. Okay, it just we've had obviously a bounce heading into or following the non-farm payrolls. Now, this resistance that you see here, and I'm going to have to put it on a well, you can just see it on the 4-hour chart. We're actually challenging the underside of this trend line and also the 618 retracement. Now, early into next week, or into this week, excuse me, if we can break above 117 and a quarter, that should trigger more dollar buying. However, watch gold. If gold breaks above 1200, that the response that you'll see here in the dollar yen is the dollar yen will probably be back down at 116, maybe even lower. And obviously, if we break below 115, that should bring that double top extension, which would take us down to like 113.50. Okay, so bottom line is early this week, the 117 and a quarter level for the dollar yen is going to be watched very carefully. Now, the other and last currency pair I'm really keeping an eye on is the dollar Canadian. Why? Well, the dollar Canadian, if you have to go out to a weekly chart, you can see this really strong trend line that we've been following here for the last, couple years. Earlier this year or in 2016, you could see that we were building some sort of bear flag. Well, it never played out. We could never break below that trend line, and instead we actually rallied as crude oil came under pressure. Now, crude has rallied back, following the OPEC meetings and some of the agreements that they've had, and crude oil is held well above $52, and it looks like it actually could still break out to the upside. If that happens, that might be what it takes to break the dollar Canadian below 131.50. This is a major trend line in my opinion, and if the dollar Canadian breaks below 131.50, it might not be a product of dollar weakness, but it might be more of a product of Canadian strength, which that means we'll have to start looking at the Euro Canadian, Aussie Canadian, Pound Canadian, Canadian Yen, other Canadian related pairs I think could see Canadian strength if the dollar Canadian actually breaks down. Once again, this is the week ahead with ForexAnalytix, and my name is Blake Morrow. You can catch us next week. Also, again, if you haven't taken advantage of the holiday special, it does expire January 16th. It is for new subscribers or new clients only, but if you haven't taken that next step, make sure you do it today. Have a wonderful week of trading. We'll talk to you next week. Thank you very much.